Hey everybody, thanks so much for tuning into Young Money Investments on this evening, Sunday, August 12th, 2018. Thanks so much for tuning in. I know I'm releasing a whole bunch of videos recently with Jonathan and all these new I kind of want to start a little series and do a few, kind of like a three-part video with Jonathan on some of the new investor mindsets, because I've been trading for so long now and I've learned so much kind of in trial and error that I think I forget that a lot of people don't understand a lot of the terminology that I use in a lot of these videos. And that's kind of the comments and kind of the consensus that I get with folks on Instagram, friends that message me about that as well. And so this is kind of what I wanted to do, was create that little series. Hopefully those will help and kind of shed a little bit more insight. But for those of you that are a little bit more advanced, Stock Pick Sunday is the day and way to go. We're going to recap some of my trades this week. We're going to go over some of the plays that I see for this week, and let's roll into it. So this week has been a pretty flat week in comparison to last week, I would say. Let's pull up TD Ameritrade and go over a few companies that I'm in currently that I've taken some positions in. I've had some really good swing trades this week. I had a swing trade in Hertz HTZ, and I think I made 20% in a day. That was a freaking gnarly one. That was actually a really gnarly swing trade, or day trade, pardon me. And I also had a nice little day trade or swing trade. It's like a 3-day trade in Alibaba. But I don't really want to go over my swing trades because those are in the past. What's important is the future. Talking about the future. Talking about the future. Yes. Let's talk about the future. We're not going to talk about Amazon right now. We're going to talk about good old eBay. Good old eBay. Now, eBay is one that I have mentioned quite a bit. I've been in this for a couple weeks now, and seeing the pullback, I still see a lot of value in where we're at currently in eBay. I have a large position in eBay, and I've added to it. Right now, I'm currently just up $11.90. I was down $117 on Friday on eBay. But if we look at this chart pattern here on eBay, you're going to see a lot of consolidation right here. You're going to see where it has touched previously on this line right here at about $34. We've seen consolidation down here to $32.85, which was a little bit scary for me, folks. I'm not going to lie, everybody. I was a little bit worried down here, but even if you're able to trade it, if you're able to trade from here to here, you are looking at a nice little 3.5% return on that. And I've capitalized on some of those gains. I really do see this starting to trend up. I'm hoping that I can start to see eBay get up into this price point right here where I can actually sell a part of my position. I'm looking to half my position in eBay right here at about $36, $36.05-ish. And then I would also sell out my whole position at about 38 and look for some consolidation right here in this range. But currently, like I said, I'm just basically buying in. I bought in several more shares. I'm looking at my buy and sell dates right now on eBay. Looks like August 7th was my last buy date. I bought 100 shares at $33.78. August 2nd, I actually had bought 200 shares at $33.24. So I had been buying down in this little range right here, kind of close to the bottom, because I saw the value. I just saw the value in it. Hopefully this week we can get a little bit more of a pop. Like I said, this week was a little bit more flat for me in comparison to the other weeks. I'm only in 5 real positions right now. Next one that I bought into this week on the dip, and I think this is still actually a really great buy right now for everyone that is looking for a nice little swing trade. And that is good old Caterpillar. Now, if you've watched my channel, you know that I'm bullish on Caterpillar. I see long-term value. I see swing trade potential galore in this. And if you look at ever since I started saying to get into Caterpillar, somewhere right in this range, you'll notice that it has really showed a nice little consolidation pattern on CAT. So if we zoom in on this, and I'm going to pull this out a little bit so the candlesticks look a little bit larger, you're going to see here on Caterpillar that it has had quite a bit of touching right down in this range, right? So you can see some touching through here and it continues right over to here. But you can also see a great little buying opportunity right here at about $35.91, $36. Now, ironically enough, what is Caterpillar trading at right now? $36. So this is why I like Caterpillar right now. Your downside on $36, so right in here, to support is about 0.7% of a potential for loss. And yes, if you want to really write it down, you're looking at about 1.83% potential for loss. Now, if you want to talk about where it has been trending up to recently, I would say your potential for gain is somewhere right in this range, which would be a touch here, pass through 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 here, and then you can see some consolidation right over here as well. So if we rode it up to that line, you're looking at about a 4.6% potential for a return on there. So I like the fact that the max I could potentially lose is about 0.7%, all the way at the very max loss where I would sell out if I was getting into this fresh without being in CAT at all, would be about a 1.87% potential for loss. So potential for loss to potential for profit is much greater, and that's just a short-term swing trade that I would see potentially riding it up into this maybe $143, $144 price range. And you can make, I mean, at that point, at 144 is really probably where I would sell out. You're looking at a sellout of about 6%. So 6% is a nice return, and I am heavily invested in my Caterpillar position. So if all goes well, that should be a really good play for me this week. I do see quite a bit of volatility in this. I mean, if you look at this, if you're playing it from peak to trough over the course of this past week, you're looking at about an 8% swing that it has had. So I like that it's swinging that much intra-week. And I see a lot of great potential for profit in it. So Caterpillar is the next one that we're going to talk about. L Brands is one that has really made me mad. So if you've also followed the channel for a while, L Brands has been one that I have traded quite frequently. L Brands had this nice little push up. You know, I had seen quite a bit of value. I am getting a little bit worried coming into earnings right now. I am most likely, in full disclosure, going to probably sell out of L Brands here fairly soon. L Brands, based on their last little report and everything, they're getting very complacent. The ownership and management of L Brands is, they just don't see the problems with Victoria's Secret. And Victoria's Secret's hurting right now. Honestly and truly, Victoria's Secret is not putting out the numbers that they need to in order to be popular anymore. And it's concerning for me as a long-term investor to see management thinking all about the short term. They're paying out great dividends. I mean, they're literally taking all their profits right now and throwing it into dividends. Now, short term, that's great, right? Keeps the stock price good. People want to be in it. People want the dividends. It's more profit, more money in your pocket. Problem long term with that, though, is you don't leave money to invest in your product. You don't leave money to invest in your stores. You don't leave money to grow. And so this is the problem that I'm seeing with L Brands right now, and this is why I want to get out of this stock fairly quickly. Now, do I still see it as a good buying point in terms of the charts? I do, and so I'm not out of my position completely. I sold half my position fairly recently. I'm currently only down 2.23%, average cost basis of $31.96, and still have a decent position, not to me a large position, but still a decent enough position that I can make a decent amount of money or I can lose, you know, a decent amount of money. Another company that I'm fairly large in, I have 4 figures worth of stock in this company right here, and this one is going to be big old Micron. Micron right now is at a good little turning point. This, along with Caterpillar, I see as the best 2 swing trades for this upcoming week. Now, there may be other companies, not saying that there are not, you know, Tesla and all that good stuff that I'm always in. But in terms of chart patterns, I'm really liking the position and the play of where Micron is at right now. This SMA line is looking really good in terms of being able to use it as support. And I do see that it is finding this massive support line right down here at around 51.43, 51.40-ish, you know. So if I was looking at this long term, or even, you know, like I said, I'm looking at this as a swing trade here, gosh, it just looks really good. It has touched here before. Although we have had a sell-off right here, that was about a sell-off of 2.6%, and I would worry about that. What I would worry and what I would look for on this trade right here, though, is if you're looking and wanting a place to potentially sell out of, I would not ride this below the SMA. I'd look for a bounce right here tomorrow, even potentially, to look for about $1 drop, where if you can get in, you're getting, right now it's trading at 51.44, 51.41. So if you were to get in right here, and you were able to, I mean, if you were able to get in off the SMA, you're looking at about a 1.9% return. So if it does have a sell-off tomorrow, I'm looking for a sell-off on Micron right here to about 50.44. If you do not get in on this price point right here, like I was saying, this is still really great. I see even a short-term potential for a write-up of about 10.7 to 11% on this, and that's going to be great. I think that's going to be huge in terms of what Micron can do. I like the fact that the SMA is trending down. The RSI indicator is right here at about a 37. Last time it was at a 37, was right in here. I mean, it stayed pretty consistent. RSI, it's just, to me, like I said, looks good. I like the chart pattern. I like the way MU looks, and I have a quite sizable position in that. Honestly and truly, I think those are the main ones that I want to get into. I have a couple long-term positions that I recently got into as well that were for US Steel, which is ticker symbol X. It is having a massive sell-off right now. I would look for a bounce right here at about 28.58. For some reason it is just going down, 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 down. But with the Trump trade war and everything like that, I see this as a great little buy play. RSI down here at 24. Even if you were going to swing trade or day trade this, I mean, gosh, it's always nice to get into a company at about a 24 RSI. But if you're really wanting to play it safe, I mean, look right here, it is showing some consolidation, or where it has bounced or has support previously, or resistance, which could turn into support right here. Other thing is, if you really wanted to play it maybe a little bit less safe or a little bit more conservatively, I would say getting in right in this price range of about 28.40, and it's trading currently at $30.05. So if you were to even ride that up, you're still looking at about a 3 to 4% return, 3.5 to 4% return on US Steel if you day trade that. Now, long term, like I said, or swing trade, long term, what I see in US Steel is because of the Trump tariffs and things like that that are getting placed on imported steel. US Steel has a lot of backing from the United States government, and so I like that as a nice little, not a tech company, because I normally am big into tech companies, but currently I am, like I said, I'm looking at diversifying a little bit in my long-term portfolio. The second company that I see long-term value in is going to be Toll Brothers. This is the 180-day chart. If you go out to the 3-year, boy, if you go 3 years, that's a long chart pattern here. But as you can see, if you're looking 3 years, I can see some consolidation right through here. Boom, 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 boom. And so I see this being a nice little consolidation line for Toll Brothers. Toll Brothers creates high-end luxury homes. If you did not know anything about Toll Brothers, housing market seems really good. They are fairly good even if interest rates are going up, because of the fact that most of their home buyers are fairly wealthy. Their average home price is right around $800,000. So these people that are buying these homes are not really concerned with the pricing. They just recently bought several large pieces of property to start getting their building cycle regoing. And so if you're able to buy down here and you're looking to hold long term, I honestly and truly can see a nice little run up even into this area, minimum of a nice little 25%. Long-term, low risk, and a great company that, barring a large financial crisis or recession, should be great long-term. So those are the plays. Those are everything that I'm kind of wanting to go over this week. I hope that I've kept it short, sweet, to the point. 14 minutes is not as short as I was wanting, but you know, that's about as good as I can do. So thank you so much for tuning into Young Money Investments, everybody. If you have any questions, leave them down in the comment section. Thanks so much for tuning in, and I will talk to y'all later. Bye.